Okay, welcome to Investor Series, where we are going to talk about
market updates,
ways to grow your wealth,
and how the benefits from investment.
Welcome to podcast. I'm Fairuzee, and now we are in the episode of Market Updates, where every week we are bringing you all of the important updates that what happens last week and what is going to happen this week. And this week is actually very important week. Okay, so let us look at the summary of what happened last week. So last week, as mentioned, that we had a rally in the market, the S&P 500 from 6,725 November. It went up to, if you look at Friday, 6,837, 28 November. Okay, so currently we are recording at 3 December, Wednesday. So currently we are at 6,828. So there's not much, I would say, increase. So the market, if you are looking at this market, it is called the market looking sideways. So it neither go up, neither go down. So it only plays around that line. So this situation is a situation where the market or the investors is waiting to see what will happen in the market. They are not making any move. The whales, the one who holds a lump sum of the shares, are not making any moves because they are waiting for updates this week. Okay, why are they waiting? Because next week on, I would say, 10 December, we have the Fed will announce whether they will cut the rates or not. Okay, and as mentioned, cutting the rates is fundamental for the economy. The interest rate is fundamental for the economy. So if you cut the rates, okay, there might be a rally going up because there's optimism and confidence in the investors, knowing that the economy will benefit from the interest rate cuts. Okay, and if it's not cut, then there will be a bit of pessimism and they will be down in confidence, like they will not know what will actually happen in the future. So this is a very important point in the economy. So 10 December on Wednesday. So stay tuned. So next week's episode will be very interesting. But before that, there will be certain, what we call here, certain reports that is important. Okay, so on Monday, we will have the ISM Manufacturing PMI, okay, which is the Purchasing Managers Index. And this is important. Why? Because it surveys over 400 purchasing managers across 20 manufacturing industries each month. Okay, and they will want to know whether there's activity. Is it the same? Is it better? Or it's worse than the previous month? Okay, so this is important. Okay, because then from here, you can actually see whether the market is moving or the economy is moving or not, right? So if it is strong, then the Fed might think that, oh, the economy is doing well, we don't need to do anything. So that is an effect, one of the possible effect. Okay, right? So PMI. Okay, the next one is the ADP job report. Okay, so the ADP job report is the private job sector. Okay, they will look at whether the employment is doing well or not. Okay, actually they are supposed to look at the NFP, which is the National Job Employment Report. However, it's delayed. So they are now looking at this. If the ADP job report is strong, then there might be no interest rate cut. If it is weak, then the Fed might think that they will need a boost from the Fed, which is the interest rate cuts. Okay, and lastly, we will have the inflation report on Friday. Okay, on Friday, 5 December. Okay, and this is also a gauge from the Fed looking at whether they want to cut the interest rate or not. Okay, so inflation, if it is high, and what does it mean when inflation is high? It just means that the economy is doing well. People are buying, and when they keep increasing, the people are still buying. Okay, so means that they will not. They may be, if it is in healthy, what we call here, in a healthy healthy number, then they might not cut the rate. But if it is low, it's going down, then they might cut the rate. Why? Because they want to boost the economy more. Okay, because by cutting so what will happen? What is the effect of cutting interest rate? Right? Because when you cut interest rate, what happens is that the debt, okay, of the people, especially the US people, what happens is that their debt will be lowered because you pay less interest, right? Okay, and also the companies that we see, all of the companies that we invested in, they will also have lesser debt to pay, and hence more money for resources, more money to do more business, right? So interest rate cuts is actually anticipated by both the retail investors and also the corporate investors and the corporate companies, right? So that's why this week is a very important week. Okay, so from these reports we can actually see whether the Fed might cut the rates or not. Okay, and also there will also be earning reports from certain important companies like the banks, like certain Salesforce. Okay, so these are important companies that will actually shape I would say the economies, the sentiment for the investors. Okay, so again, this is a very important week. Okay, so what should we as investors do? Okay, for those of you who have extra cash, you can actually invest more into the tech sector. Okay, but again, like I mentioned, keep investing. However, please do your strategy, know your strategy well. Okay, so like I mentioned, if you are investing in ETF and unit trust, you can just invest in 3 or 2 unit trust or ETF. Why? Because unit trust and ETF is already diversified in different companies. So it's not like only one company, no, it's already diversified. Hence, it's enough to invest in 2 or 3. But however, what is the 2 or 3 unit trust or ETF that you invest in? So, for example, this is just an example. Please do your due diligence, please do ask your financial advisor. This is not financial advice. What you can do is that you can do 50-50, 50-50, 50% and 50%. 50% is for maybe tech, next generation tech. So this why we invest in next gen tech or tech, because these are the sector that will profit from the interest rate cuts, and the earning reports of these companies is doing well, and we are also looking at the AI integration, okay, into the companies right now, and they are benefiting from it. Okay, 50%, and another 50% in commodities, gold, energy, silver maybe. Okay, why? Because these commodities, they might have an inverse effect on with the tech. Okay, so if the tech goes down, then the commodities might not be as affected, and hence you can actually buy in the discount from this commodity. So the scenario is, if 50% or the tech goes up, then it's good, right? You don't have to do anything. Okay, if the tech goes down, that's actually a good news. Why? Because you can actually buy from the commodities you buy into the next technology or next gen technology. Okay, so remember 10 December Wednesday, there will be an announcement whether the interest rate will be cut by the Fed or not. Okay, so what's the answer? I do not know. So what we know is that there will be an effect if it is cut or it is not cut. Okay, so better do your investment now. Okay, so that's all. Please do take care. Okay, as you can see, I'm alone. Okay, we have Estelle and Shahid going on holidays. So please do take care in your holiday. And again, if you have a lump sum of money you want to invest and you don't know where to invest, you can contact us, Investors Series. Okay, me, Shahid or Estelle. I think that's all for today. Okay, so let us invest and grow our wealth together and smarter in an efficient way. So thank you. That's all. Goodbye.